This is Prince Stacks. This is the Royal Financial Investment Group. Once again, this is another great video. A video I'm going to tell you what is the PE ratio, and I'm going to show you how you can actually apply it. But before we get into that, don't forget to hit the like, subscribe, share, comment button, all of the good stuff. Let me know. Give me a thumbs up if I'm doing good. Give me a thumb down if I suck. But if I suck or if I'm doing good, let me know what I can do to get better. Let me know how the video was. But I don't have a lot of time. I know definitely you guys don't have a lot of time. So let's get straight to it. What is the PE ratio? PE means price earnings, right? What is the price earnings ratio? So essentially, it is what $1 will pay for the annual earnings of a company. So as we know, earnings are what the company makes every year. So it's going to divide that by its shares. It's going to tell you for this stock, you have a 1 to 10 or 1.5 or whatever, right? So how is, how like, okay, well, that's nice. No, that's cool. How can I use that? But a company that has a low PE ratio means that it is probably undervalued and that the market has an undervalue of the stock and that it could be a great buy. And what is known by Warren Buffett, a lot of value investors, they see a great value. They look at it as a steal if it has a low PE ratio compared to a company that has a high PE ratio. Now, a company that has a high PE ratio is not a bad thing. Growth investors see a lot of potential in companies that have a high PE ratio. But this can be seen as risky because a growth investor says, hey, I can see this company growing in earnings in the future, right? So they may go for a company that has a higher PE ratio for they can see the value in the future because of their earnings are predicted to be higher and higher. Now, on the reverse end, like I said, a value investor, they look for a company that has a low PE ratio. So, but now, it's one key thing to keep in play. When you're comparing PE ratios, you have to compare uh, companies that are in the same industry. For example, you can't compare Verizon to a General Mills. Verizon is in the telecommunication and General Mills in the food industry. PE ratios differ from industries. So now that you know that information, you're like, man, how do I apply it? That's nice, that's cool, but don't worry. You click on the best video on YouTube that's going to teach you how you can actually use it. For example, I have Verizon pulled up, right? So you say, Verizon is pulled up. It has a 19 point PE ratio of a 19.57, right? So you say, okay, well, that's nice to know. How do I know what industry it in? Boom, don't ask. See, communication service. That's his industry. You got the services, which is a little bit more broad, and you can break it down even more to communication services. So you can compare it here on a etrade. We clicked on the communication services. This is communication services comparisons. So you can come down here and you can say, So compared to the industry average PE ratio is 24.8. So what was Verizon's on? Verizon's was 19.57, if I'm not mistaken. 19.57. So Verizon is lower than the industry, right? So you can come down here and you can compare other companies that are in this industry that are top performers, right? So you can compare. You have a high growth potential and things like that. But let's say if you look at an MBT, for example, look at MBT and you compare their PE ratio. So theirs is 11.48. So 11.48 in the same industry is in the communication services compared to Verizon, VZ. We go to Verizon, it has a 19.57. So Verizon has a higher PE ratio. For a value investor, which one would they choose? Bam! Look at you, learning already. You already guessed it. They're going to choose MBT. And why would they choose MBT? Because in this industry, compared to the industry, it has 11.48, which is significantly lower than the industry. What is the industry? Boom! Look at that. You guys got a great memory. You learned already. 24.8. 24.8 is the industry average price earning ratio. And mobile MBT, the stock symbol MBT, is way lower than that. So a value investor will see great value in that, hey, the market has undervalued this stock, right? Now on the reverse end, you have Verizon. Let's go to Verizon. Let's go back to Verizon. Verizon has a way higher price earn ratio of a 19.57. But a growth investor, they can see great value in that because they can say, hey, this company has great earnings. It has high earnings. We can see higher earnings coming in the future. But we all know, I'm not going to get it. I don't want to get off topic. But then again, that's how you can use. So in this video, you learn what is the price earning ratio, how you can use it, how you can compare two stocks and everything. So I think that's pretty good, right? So, and I kept it in a good time. So anyway, don't forget, like, subscribe, comment, share, all of the good stuff. Thanks for watching, and always be safe.